Well, every single day when I get up, one of the very first things I do is go check on my subscriptions, and I only have two on X. There's only two folks that I listen to on X and willing to pay for what they're going to say. That's Gary Black, and the other one is AJ, or also known as Aloja. And so I reached out to AJ and said, "Hey, would you like to come on the show?" And he said, "Sure." And so this morning, I am pleased to introduce to all of you the famous AJ. How you doing? Good. How you doing this morning, AJ?
Hi, everybody. I'm doing very well. How are you doing?
I'm doing swell. So, Alojo, what is there a meaning behind that?
Um, so it just call me AJ. Aloja is just a it circles back to my name,
I see. Okay.
and yeah, and I'm keen to stay anonymous because this just allows me to comment in an unshackled way, and I never have to think about twice what
Yes.
I post, because sometimes I write about very powerful and wealthy people, and if one of them has a bad day, this could end up bad for me, and that's why I must stay anonymous.
Okay. Well, you describe yourself on X as an ex mergers and acquisition banker and a C-suite corporate oh, I'm sorry, in a C-suite corporate finance advisor. So, is there anything you want to add to that would give us some kind of background on you?
Yeah, so that basically captures it quite well. So I was before I retired, I was investment banker. I worked so my main product was M&A, mergers and acquisitions. I worked alongside my colleagues, from equity capital markets, called ECM or DCM, debt capital markets. And as the M&A banker, and in my role, I also had like a coverage role. So I held the client relationship
Mhm.
for my employer, which is one of the leading investment banks at the time. And so basically, my counterparties at the client would be a CEO, typically CFO level, head of finance, or was a CEO, and discussing basically acquisition targets, or also disposals, and also so that's basically kind of the marketing side of things. But then when there's a deal, also executing deals, executing sell side deals, or working for a client in a buy side situation.
Okay, all right. And so that's why pretty much been doing this kind of analysis that you show us all the time. This is kind of a second nature to you.
Yeah, this hits the nail on the head. I sometimes say half jokingly, I was kind of born for this stuff.
Yeah, yeah, right. Okay. So I noticed that as part of what you do on X, you are particularly drawn to the analysis of other car makers, not just Tesla. You're Tesla centric. I'll get to that in a minute. But as you do all of these different car makers and you're talking about, in many cases, a lot of the problems they're going through, like a Volkswagen or Mercedes, or certainly some of the ones that are in even bigger trouble. What do you see 5 years out? Who's going to be left? Who's going to be the top car companies 5 years from now?
Um, okay, first of all, that's a matter of definition. Are you talking about volumes, revenue, etc.? In 5 years from now, in terms of volume, there it, okay, the thing is, the automotive industry typically doesn't move super quickly,
Right.
because five years from now is basically just 20 quarters. Um, BW will still be quite large. Will it be still the second largest by volume? Not clear. I can see someone like a BYD potentially catching up at that time. Um, People at the top right now, this is Toyota in terms of volume. Toyota is number two in terms of revenue. Toyota likely, um, there's a good chance that Toyota might lose the top spot. And again, the top competitor right now appears to be BYD. The other big Chinese automakers are actually falling behind. So the other big automakers in China are the old Chinese automaker, and they are struggling significantly. So when you look to China, it's not only the foreign automakers like Mercedes, BMW, GM, and so on who struggle with the Chinese competition, but it's also the old Chinese automakers who struggle with the new Chinese competition. So there's a clear divide in the Chinese market between old and new. So going back to question, when we look at the top automakers, I guess Toyota will probably shrink. Will it be cut in half? I don't think so. In terms of volume, BYD has a good shot for the top spot in terms of volume. Whether this amounts to any meaningful profitability, cash generation is a completely different topic, but it could end up as the top automaker. So I leave it at that because there are so many names we could go through. And we could talk about this question for several hours.
So I look on this show. I've talked about, of course, Tesla being in that top group and BYD, but also Honda Kia. Do you see that?
Good point. So I didn't mention Tesla because of the robotaxis. I believe in 5 years, Tesla will have a fully functioning robotaxi. And at that point, economically, it makes basically 0 cents for Tesla to make cars and sell them to people. It may only make sense to like if you go really just after the dollars and safety and all these things, what you do as Tesla, you turn all your production lines into robotaxi production lines, and this is what you do. And any excess capacity you direct towards making humanoid robots viable, and you don't get stuck in selling cars to people, which has never been a great business.
I see. Okay. All right. And so now that you've mentioned Robotaxi, what are your hopes and expectations for 1010? And what will it take for the stock to have a good day on 1011?
So my base case expectation with 1010 is that we see the full robotaxi user experience, which means I expect someone with a smartphone, where we have a live screen where we see the screen of the person's phone, where the person presses a button, chooses a location, and then we receive from somewhere else a robotaxi showing up, and the person gets in, and the vehicle drives without visible steering wheel, etc. The person to some location somewhere in the venue they picked in I think Los Angeles for the event, and then the person gets out and payment, etc., like A to Z, kind of basically Uber. I want to see Uber just without the person in the car driving. And so this is what I describe as like the full robotaxi experience. This is my base case, and then the vehicle itself, I have actually very little expectation because Elon long time ago said the robotaxi will be utilitarian, and I think this is what we're going to see. So you should not expect, in my opinion, amazing vehicle with amazing features. No, it will be relatively plain, functional, or as Elon said, utilitarian. It will probably still look quite cool, but it will not be coming with all bells and whistles, because it doesn't make sense. Because the dominant strategy for a robotaxi is being the cost leader, because the lower you can make the cost per mile, and the vehicle cost is an element of that, the larger your market is and the faster you can penetrate the market. And there's even an ethical reason why you want to do it, because if you make the price low enough, people will more quickly switch to robotaxis, and robotaxis will be inherently safer than the average human, and thus motivating as quickly as possible, as many as possible people to move to robotaxi is ethically the superior point here. So it not only makes strategic sense, but also like from human aspect. And having followed Elon for many years, I think this is what he's going after. I think he will launch the robotaxi once it's ready at a highly competitive price. And that one aspect is a robotaxi that comes at relatively low production cost.
Do you think that there will be a supervised driver version of the Robotaxi network that starts fairly immediately, within a month or two after 1010? Do you think there'll be an announcement that my car, I could go out and start getting revenue from my car as long as I'm willing to sit in the seat anytime soon?
Sorry, just to be clear, you mean Tesla unlocks functionality for current owners to contribute their vehicle to a Tesla customer-owned fleet?
Yes.
Okay. This, to be honest, I don't see why. I don't see once the software is ready. Okay, and unless you lack production capability for the robotaxi, I don't see why you would launch the 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 Tesla customer-owned robotaxi before the Tesla-owned robotaxi. So, and I did run some numbers on the economics of a Tesla customer-owned robotaxi to Tesla, and that is actually not so attractive to Tesla, because ultimately Tesla only takes a cut of the revenue, and if you assume something like a 30% cut, it's still quite lucrative, but it pales in comparison with the robotaxi that is owned and operated by Tesla, and this has to do with various things. First of all, Tesla gets only 30% of the revenue. Secondly, the Tesla customer-owned robotaxi will likely have very low sorry, I'm looking the word, because the owner will use their vehicle. So the owner will only attribute the car for certain hours a day, most likely, and hence the overall I'm looking the word, the amount of time the robotaxi can actually bring in revenue is relatively low compared to a pure robotaxi. But anyways, so I'm really focused on the Tesla-owned robotaxi and the customer-owned robotaxis. I find this, yeah, it's more second consideration.
Okay, but Elon, of course, has promised for 8 years that there would be a day when that capability would be turned on, and it would be the largest transfer, or the largest single wealth factor ever in history in terms of wealth building for the owners of the cars at that moment. I think many people have purchased their cars based on that promise. You're now thinking that Elon would back away from that, or that
No. I think I didn't make myself clear.
Okay.
I'm not saying he backed away from it at all. I'm just saying from an investor perspective into TSLA, the stock, the economics for a Tesla-owned robotaxi are just so much greater than from the revenue cut Tesla gets from a Tesla customer-owned robotaxi. So this is where I come from. I do not doubt that Tesla or Elon try to unlock current owners' current owners for them to contribute their vehicle to the fleet. I don't doubt this at all, unless they find out there is something which prevents them, which currently I don't think we have evidence for that, but there is some speculation. Perhaps the camera positioning is not optimal for certain situation, yada yada yada. Right now, my thinking is this is probably overblown, because the field of view of the camera is actually, anyways, this is like a completely different discussion.
Sure.
Right now, I do believe that the Teslas that roam our roads, they have in fact enough hardware to make it work, especially when you're on hardware 4. Hardware 3 is a different question, but um, based on all the research I have done, I think with enough effort, you can even get enough performance out of hardware 3 to still make it viable, at least in most scenarios.
Okay, I guess my question was, I think what a lot of the of my co-hosts that I have on this show and a lot of people that I follow on X are believing that there will be a period of time before the fully automated vehicle is running around without a driver, that it would be beneficial in many ways to have a period of time where there would be a where I personally or I would hire somebody to sit in the seat and supervise the drives just as we do now in a Robotaxi environmental ride hail environment prior to the automated version.
Okay, I see where you're coming from. Just to confirm, we have the correct understanding. So basically, a current owner hires a person that just sits in the car, doesn't drive, just supervises, but FSD does all the rest, and the vehicle picks up customers. Tesla provides like a Uber app service to the customer, and this way Tesla and the owner, they can collect some revenue. And the owner pays basically the supervisor of the vehicle, or they can supervise, of course, by themselves. Is this sort of the model that is being discussed?
Right.
Am
That would be
Okay.
a model that could be done immediately that would
Yeah.
start providing all kinds of data and help them understand more about the market and how to clean them and all the kinds of things that we've talked about.
Um, I think the probability of something like that is very, very low.
Okay.
And the reason why I say so is, first of all, um, if you still need if you still need someone in the vehicle to supervise, even if this person can be like half the time asleep almost, um, you basically haven't added you basically added no economic value compared to an Uber.
Uh-huh.
If you think about it, what is the difference? Yes, you can argue, oh, the car is safer because it's the robot driving and not someone who perhaps just had a fight with the spouse, blah blah blah. Yeah, yes, of course, I get that, but just from a pure economic perspective, there's no difference. I don't see any difference between Uber and that sort of business model, and hence I don't think Tesla will um, allocate resources uh, to making that work. I think no. I mean, I don't know Elon, but I followed him for a long time, and he's always laser focused on sort of the big win, and I think this is what he's about to do. He's basically focused on getting the Robotaxi working, and all else is like second order priority. And also when you look at the progress of FSD, it looks like making the Robotaxi work and something, and the model we just described, there's probably not too much of a time difference. Perhaps
Oh,
there's a year, maybe there's a year, or maybe there's 18 months.
uh-huh.
But in the grand scheme of things, this is a very short time frame. And why would you try to make like an Uber clone that is obsolete after 18 months?
Okay. All right. Okay.
This is sort of how I think about it.
Okay. All right. So the numbers came out Wednesday, and
Yeah.
all of us were a bit surprised. We expected more units. Uh,
Yeah.
what do you think was the main reason we all missed?
Um, so so I put out my forecast roughly a week before quarter end, and I was at basically exactly 480. And so I did some research. So why was I so wrong? And so I was off 3.5%. And historically, this is like extreme outlier for me.
Yes.
And the reason why I was so off was Europe, like my Europe forecast was like basically spot on. We get in a week like the exact numbers, but there in Europe we have a bunch of daily reporting countries. And today I got Germany numbers. My Germany number was like right, spot on, etc. So Europe forecast was great. China forecast is not really a forecast 1 week out because we get weekly numbers from
Right.
China. So we knew China almost exactly. And then the rest of the world has also pretty good disclosure. The country with potentially the worst disclosure is the US,
Right.
which is a huge pity because the US is the primary and most important market for Tesla. And so anyway, so long story short, I got the US wrong
Wow.
quite a bit, and that caused like almost all my error margin. And so now when you think about, okay, why was I wrong and so many other people wrong that spent a lot of time on this topic. And I think what people underestimate are two things. One, the cannibalizing effects of Cybertruck on S and X. S and X sales kept reducing further and have now dropped by my estimate to an all-time low. If you, of course, take out the 2012 launch quarters and of course the refresh RAM quarter, if you take out these let's call it one-offs, 3Q 2024 was the all-time low for these vehicles. So you can clearly see a Cybertruck effect, which makes sense. Cybertruck is in many ways a superior vehicle at a similar price point.
Yeah.
So that's one. But of course, those vehicles are not the bread and butter vehicle. Cybertruck, at least, is not yet. So there was also weakness apparently in 3 and Y sales. Otherwise, we would not have seen this um, underperformance. However, I'd like to point out that this time Wall Street was actually right on the money. I have to give credit where credit is due. So usually the Tesla community analysts, they tend to outperform Wall
Right.
Street. But this time Wall Street was right on the money
Yes.
because whether you looked at median or average consensus, you came out from memory at 463, 464, which was right at where deliveries came in. So given Wall Street is usually more often community analysts, this might have been a fluke. So we have to keep this in mind. But anyway, I just want to point it out, just to be fair. And so anyway, so I did some investigation and I already found, I think, a way how I can fix my US estimate for the next quarter. So we'll have to see. But long story short, US underperformed. Part of the reason was likely Cybertruck, but there are also probably some weakness in Model 3 and Model Y. And then when you think about, okay, why is there weakness in Model 3, Model Y? It's hard to say, but when you look at, for example, the research Cox Automotive puts out, when you look at consumer sentiment, which is usually a very important factor for vehicle purchase decisions globally, that is not looking great. And then also we saw, I mean, across the board, Ford numbers are really bad for Q3. GM's numbers are quite bad for 3Q. So basically, it's not just a Tesla problem. So when we talk about weakness in Model Y, Model 3, but look at all the other automakers, we can clearly see there's overall weakness in the market. And I think this is the primary explanation why the community analysts missed, because they underestimated the overall weakness of the US market. And just like the wave lifts all boats. Once the tide goes out, all the boats kind of thing. And I think this is how I would explain sort of the Tesla community analysts' misses, including my own.
So my theory has been for a long time, and I didn't include I don't do the I don't no longer participate in the guessing game each quarter because you're so good at it. So it's like why should I dig into the numbers? I don't have the resources that you do to do the digging. So I don't do the guessing anymore, but I've been saying for, I guess, about 90 days, maybe longer, maybe even 2 quarters now, that I believe that the Cybertruck and the potential for a refreshed Model Y are both Osborning the Model Y. That
Yeah.
that folks that might be Model Y buyers are waiting for they're waiting for their Cybertruck.
Yeah, yeah, absolutely. Yeah. I think there are various factors and the elements you just pointed out. They probably added and once you put everything together, the weakness in the overall market, some expectation of a new Model Y coming out, etc., etc. I think this provides a pretty complete picture why sales didn't increase more than they have. I mean, but let's just remind everyone that sales did increase quarter over quarter, and sales even increased year on year. Although analytically, I need to point out that last year's 3Q was depressed kind of artificially because Tesla switched to the new Model 3, and hence in 3Q last year, there was a lot of unavailability of Model 3, which created a low year-on-year comp for this year's Q3.
Okay. All right. Okay. So now we have the shipment numbers. You've been able to update your expectations for the earnings coming up on the 23rd.
Yeah.
Would you expect now that this is going to be the trough quarter? This is going to be the bottom, the lowest, and from now on, it's just straight up and to the right?
There is straight up. Okay, this is a bit tricky because we need to consider some seasonal factors here. So okay, let's go one by one. So fourth quarter, China, and you of course noticed, just recently announced a massive stimulus program for the economy. It's the biggest since 2008.
Right.
But China already launched a automotive stimulus in April, May, where they especially increased incentives to buy electric vehicles and other electrified vehicles in China. So this already affected the market. So sales were revived after some weakness. The overall Chinese auto market was still contracting, but the electrified vehicle segment in China was expanding by a healthy rate, and this helped Tesla, and this is why Tesla was printing all-time records in China. I expect a new all-time record in the fourth quarter because it's not only all the stimulus stuff that's going on in China helping Tesla, but also the fourth quarter is traditionally always the strongest quarter in China.
Right.
There are just some local Chinese effects, let's call it, that always, unless there's like economic calamity, it's always the strongest vehicle market, period.
Sure.
And so that's why I expect very strong numbers from China in 4Q. And China is a very, very significant market for Tesla, of course.
Sure.
So that's very strong. And then to a much smaller scale, there's a bit of that also going on in some other Asian markets. So Asia looks good in 4Q, very good for Tesla. Europe also tends to be quite okay in 4Q. So I don't see a significant downturn here. Also, we could see relatively soon new incentives in Germany. They're being heavily discussed. This could drive, if they come soon enough, of course, in the next couple of weeks, this could drive a year-end rally in Germany. And Germany is one of the most important markets in Europe. So that would also kind of provide a good base for the overall European sales volume. So then when we look back to the US, Cybertruck, yeah, there's everything we already talked about, cannibalization, etc. of S and X, but S and X have now reached such low volumes that, quite frankly, there isn't that much left to be cannibalized away. And so this is like, it sounds bad, but it's kind of a positive. There's not much left to lose, because I estimate sales drop to somewhere between 7 and 8K in 3Q, and this seems to me like kind of a floor rate. And let's say it drops to 5K, it's another 2-3K gone, not the needle mover. But the upside is that Tesla had like very high production of what they call other models. And they showed, I think, like 26,000 vehicles in third quarter. And the vast majority of that, probably almost 20,000, will be Cybertrucks, probably 18 to 20,000. And so this would represent a major ramp up. And there are rumors that Tesla is only working on one shift, etc., yada yada. So Tesla has probably a lot of ability to expand production, and these production ramps, they usually operate like on an S curve, and we are now in the fourth quarter of ramping, and often in the fourth quarter you see actually one of the biggest unit increases when you look at other vehicle ramps. So long story short, 4Q could see like a significant increase in Cybertruck volume, which could actually, even on a total volume level, add to volume growth in a meaningful way. So that's very positive. But of course, this all depends on whether Model Y sales hold up, because Model Y is still by far the biggest unit seller, and the US Model Y market is the most important sub-market for Tesla. So and then what you mentioned earlier becomes more important, because if there's an increasing expectation in 4Q that in 1Q we get a refreshed Model Y, that could be a problem. So that is basically the main risk. If we have like a 5% pullback in Model Y sales, it doesn't sound like much, but this would be enough to potentially cancel out anything we see in the rest of the world in terms of positive volume growth.
Gotcha. All right. So having said all that, where do you come out in terms of the third quarter earnings? We decided, instead of going through the slide deck, that we would do kind of at a high level. So go ahead and tell me your story about how you see things developing on the 23rd, just a couple of weeks away. What are we going to see?
Yeah, so basically, after having fed all the disclosed numbers through my model, I end up at 50 cents per share in the third quarter. There would be a small decrease quarter on quarter from 52 cents. However, in terms of, after the release on the 2nd of October, we already saw the negative share price reaction. Right. So there has been some pricing in, of course, but we have to see. We have to wait and see until the consensus is fully updated. Yeah. And I just like to point out, for the listeners who might not exactly know how the consensus works, the consensus is just the average or the median of all the Wall Street analysts that cover Tesla. There are about 30 analysts that cover Tesla from 30 different institutions. And what happens is these analysts report their EPS, and then you just take the average or the median of these 30 numbers, and that is the consensus. But here's one problem. There is no fixed updating schedule. Some analysts that are quite quick, they get the Tesla numbers on the next day or next 2 days later. They feed their updated number into the system, and it's being part of the consensus. And then some analysts, they take more time, and some update only a couple of days prior to earnings. So to get a really fully updated consensus, you should only take into considerations the analysts that took into account Tesla's disclosure as of 2nd of October. And the way you can do it is you look at each analyst's update date, and you can easily do it if you have a terminal. Otherwise, you need to find good sources on the internet.
Okay, so we know that we've got some additional unit sales.
Yeah.
You might suspect that there would have been some slight margin decrease because of so many cars being sold with inexpensive financing. We
Yeah.
had we had a little bit of a drop off on the energy numbers in terms of deployments.
Yeah.
Where do we but a 2 cent drop may not take into consideration all of that. Where do you see some gains? Do you see some things on the positive side that is going to make
Yeah. Yeah. So I'd like to point out my forecast takes all of that into consideration. And the reason why it only translates into the seemingly small decrease of 2 cents is because we had a very, very significant one-off item in 2Q. In 2Q, Tesla booked the headcount reduction, and that cost a 622 million one-off charge.
Mhm.
And this explains why the drop off is just so small, because as you pointed out, we had in 2Q much higher energy storage deployments, big positive. We had record credit sale, big positive, but these two big positives were largely canceled out because we had the 622 million restructuring charge.
Right.
So now when you look into Q3, as you say, we have less energy storage deployment, which is high margin, hence has a big profit impact. I expect that Tesla will not print a second all-time record high credit sales in a row, because historically these credit sales have always been very volatile, and it has never happened that 2 quarters one after the other there was like a record sale. So I conservatively assume we have some pullback. It still there will be a quite high number of credit sales, but just not as high as in 2Q. So I took this into consideration. I also took into account that that the globally available financing rates, low financing rates, plus the fact that it was launched for the entirety of the quarter, not just mid-quarter or end of quarter, as in some of the prior quarters. I took that into account in my average selling price forecast. So basically, if you look at the P&L, I go through every single line item and I account for all the effects that I see, and so it basically captures everything we discussed, and this is how I end up at 50 cents. It's not a number that just comes from somewhere. It's basically the result of all these factors, all the positives, all the negatives.
Yeah, so for people that want to see the details, they just go on to X. It's not just in the subscription, right? It's
Yeah.
public. It's in the public.
Yeah, it's in the public. I felt like I wanted to make sure. Like, look, even if my assumptions are off, they will not be dramatically off, because Tesla is a big boat. But even if you believe my assumptions are off, you can still look at all the historicals, you can see all the trends, and you can make up literally your own mind if you disagree with something. And so I want to make sure people have this available to them, so they have like an informed view, and because I find it's important to know these things, so you become, as I would say, hardened against the FUD. And that's why I wanted to make sure everybody has access.
So one of the things that could have an impact on fourth quarter sales, my background, if you don't know, AJ, is I've been a sales and marketing guy. Well, I've owned a bunch of companies, but my main skill set is sales and marketing. So I'm always looking for the product. What is the product doing? What's the customer going to be looking at in terms of the product? So my theorizing would be that as full self-driving becomes better and better, uh, especially as it gets to the, we've taken away the nag and all these kinds of things. Folks are going to be back to showing their neighbor again. People are going to be, taking their client out to lunch and showing them that they can get from point A to point B without any hands on the wheel at all. That this should potentially drive up Model Y and Model 3 sales again in the fourth quarter, even given my concerns about Osborning, that the fun, the interest of, in particular, let's say, in the rest of the country outside of California that hasn't really latched on to the Tesla brand yet, that this could begin to significantly drive sales in the fourth quarter. What do you think?
Um, um, First of all, I hope you're right. Secondly, if I just I mean, I see a lot of merit in your argument, but if I just, for the sake of argument, take the other side, you could say, oh, FSD has been around for so long. It has been covered so widely, both negatively and positively. It's all over social media for years now. Everybody knows Tesla has this product, especially in the United States. Is there an element of people having become numb to it? And once there's a new amazing video about what FSD can do, they still don't really, it doesn't really enter their mind. So is there some numbness amongst the consumers? This would be sort of potentially like sort of the counter argument. So ultimately, yeah, so basically, long minds say of I don't know, but I hope you're right, basically.
Okay. So my last question is on the energy side, and that is obviously energy is becoming a bigger and bigger part of the sales number as well as the bottom line, as you point out, because it's high margin. We saw a fairly substantial drop off. They told us it was going to be lumpy.
Yeah.
Maybe it was you. If it wasn't you, it might have been the limiting factor or CERN basher. I can't remember, but somebody did an analysis and said that the trailing 12-month deployments would only suggest that half of the productive capacity of Lathrop has been deployed over that prior 12 months. I have no reason to believe that they're not manufacturing at close to capacity. There's nothing that I've seen or heard that would suggest it's dramatically less than full capacity in terms of the actual production. Shouldn't we at some point begin to see much closer to full deployment each quarter?
Yeah. So the issue is with energy storage is that it's mostly driven by megapacks. Tesla also sells a good amount of home batteries, but the meat really comes from the megapacks. And the problem is with the megapacks, these are very large projects, and right now Tesla is only one hub from which they send all these megapacks. So they are typically, when they go overseas, they go on ship, and on ship this can take literally months for the product to arrive at the destination. But even once the product arrives at the destination, doesn't mean that Tesla can book the revenue. That's the crux here. Sometimes there can be several quarters between the time the megapack leaves the factory, the production that we see, I don't know, from drone shots or whatever, and until we actually see it hitting the P&L of Tesla. But that's the problem, because there's project accounting and the various other bits and pieces, and sometimes the megapack, sort of the power plant, the battery farm can be up and running, but the final permit is missing.
Right.
This can prevent Tesla from recognizing the revenue. So this makes it so lumpy, which is one element. The other element is that because the scale of some project is so large, like multiple hundred millions of dollars, and the overall megapack project is not so super large yet, certain project make up a big percentage of the revenue. So if it's being recognized in this quarter or the next quarter, it can make a big difference. Over time, as Megapack business is scaling, this will become less and less a problem because unless we get like mega big projects, of course. But excluding that aspect, like mathematically, there will be some lumpiness until the business scale enough. And so to summarize, there's the accounting problem with these long-term projects, and number two, there's the lumpiness of the projects, and for both these reasons, we will see for several more quarters this volatility, and the other problem is because of these factors, energy is actually the hardest to forecast.
Right.
Because so far, I have not seen any source that gives you like a decent advanced indicator before the day we receive the deployments number from Tesla. I checked out, for example, you can find on the internet various Tesla Megapack trackers. And what I did is I basically went back and used their database to backtest whether there was any way to use the data to forecast the reported deployment number.
Yeah.
And what I found, it was useless. I could not find any correlation. And I don't blame the people who run these trackers because it has to do with the accounting recognition. One project gets quick permitting, blah, blah, blah. You see the accounting effect. One project gets held up because of some permitting, yada, yada, yada. So you have all this noise in the data which you can't adjust for, and that makes it impossible to basically forecast. I got lucky, I have to be honest, this quarter I estimated 7 gigawatts.
Yeah.
Tesla announced 6.9, so I was quite happy.
Yeah, you might have missed on the cars, but man, you hit it out of the park on the
yeah. So basically, I didn't completely pull it out of thin air. I basically, of course, looked at the CFO's guidance, and he flagged there's volatility. So of course, you have to assume it goes down.
Yeah.
And then basically, I looked at historical patterns, like when it went up and then down, etc. And I used that proportionality and applied it to the grade 2Q number, and that basically delivered like a 7 number. And I said, okay, let's go with that.
Okay, all right.
Yeah.
But over time, I mean, mathematically, if they are producing, if they're actually manufacturing at capacity or near capacity, over time, that lumpiness would turn out to have some quarter where it would be over the actual number of manufactured units. But I mean, ultimately, the 12-month previous quantities that are deployed should start to become the same as the manufactured number.
Yeah, I think in theory, yes, but I think in reality, you face a lot of problems. First of all, what's the capacity? And over a 12-month time period, knowing Tesla, I think they find ways to basically increase the effective capacity of the company, because when people talk about whether it's cars or megapacks about capacity, a factory capacity number is actually a fairly, let's call it, loose concept.
Yeah.
Because people talk about, oh yeah, for example, you could say, oh, this is the slowest machine, so this machine dictates how much we can put out because every product needs to go through that machine. But can you run the machine on 125%? Or can you hit a second machine?
Right.
And all these things. And so that's why a factory capacity is a very loose concept. I discussed this with people actually running factories. And this is basically also a view they share. This is like, it's more, you should understand factory capacity more like rough guidance rather than an ultimate like fixed limit in most cases.
Sure. Yes, of course. Yeah, I ran factories for 30 or owned a factory for 30 years, so I'm pretty.
Yeah. You know exactly what I mean. Yeah.
Know exactly what you're talking about. All right, AJ, listen, thank you so much for coming on and doing this. I know you wanted to be available to prepare for the opening of the market. I do too. I still have to do a different show. This one will be on about 11 o'clock California time
Yeah.
on Friday, but I have to do my regular morning show now. Thank you again for coming on and going through this with us. And again, if you folks are on X, if you like getting into the details of financial analysis, there's no better place to do that at 𝐓𝐡𝐮𝐲. That would be the handle for AJ, and engage there as well. AJ is very quick to come back commonly and get into a conversation on X with folks about his findings. And yeah, any last thoughts?
Yeah, thank you very much, Randy, for having me. It was a pleasure to talk to you, and happy to come back
Great.
future.
We will definitely have you back. That was very, very useful and helpful. And AJ, thanks again for coming on, and to all of you out there, it's been great talking to you.